The fallout from President Donald Trump's latest round of tariffs continues. We've already seen the stock market react, tumbling following President Donald Trump's announcement. But the administration insists the pain will be temporary and worth it. Christian Cordero has the details from Washington, D.C.
Two back-to-back days of dramatic drops on Wall Street. Today, the Dow Jones again fell more than 1,000 points at the open. At one point, it dropped more than 2,000 points as the sell-off worsened. It's been the steepest drop in the stock market since the early days of COVID-19. President Trump's tariffs triggering trillions of dollars in losses in Americans' retirement accounts and corporate bottom lines. The trade war escalated today with China announcing new 34% retaliatory tariffs on all U.S. imports. Fed Chair Jerome Powell speaking today for the first time since President Trump's tariff announcements.
It is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth.
Trump on social media today pressured the Federal Reserve to cut interest rates, accusing Powell of playing politics, while Democrats slammed Trump's policies on the Senate floor, calling out, among other things, the tariffs Trump imposed on a remote island off of Antarctica, inhabited mostly by penguins.
It is unclear to me if the White House even knows what they are doing. They literally put a 10% tariff on a bunch of penguins.
The administration vows the disruption will be temporary and worth it.
The president rightly has concluded that the current status of global trade is bad for America and good for a bunch of other people, and he's going to reset it.
Trump today is at Mar-a-Lago. He and his allies are betting these policies will set the framework for a boom in American manufacturing. The question, how long will that take?
It may take years for that manufacturing to come back home, but in the meantime, consumers face higher costs.
In light of the tariffs, J.P. Morgan's chief economist has increased the risk of the U.S. falling into a recession to 60%, meaning they believe it is now more likely than not we will be in a recession by the end of the year.